No, that's not an empty promise. How do you actually learn? Do you learn visually or you are used to more of text? Well, this video will introduce you to a methodology which is totally different, allowing you to learn 50 times faster. Let's get right into it. Welcome to Learn with Lego Blocks, a completely different way to learn financial statements. Let's go then. Why are assets considered more important than revenue? Many managers do not understand this critical priority that assets play a part even more important than revenue. Let's find out why. This is the assets puzzle. You will solve the puzzle and get to learn about assets in a balance sheet. As I said earlier, playing the assets puzzle is going to be exciting. And let's not waste any more time. I would urge you to watch the video right to the end, as I'm going to be sharing with you a secret that will ultimately allow you to learn 50 times faster, as I said earlier, and more importantly, which you will retain longer. As I said, also, that's a promise. Take a look at each of these 9 balance sheet items. Can you identify only the assets from these 9 items? Idea is to place them in the asset block to the left. And that's what we're going to be doing. So the mandate is you have to identify only assets from these 9 items. Let's begin with the first column. Do you think mortgage loans are part of assets? What about accounts receivable? Yes, accounts receivable is part of current assets. And you will learn about current assets and other kinds of assets later in this puzzle. And what about accounts payable? And furniture and fixtures? Yes, furniture and fixtures are considered part of property and equipment, a category of assets you will learn about later in this puzzle. What about common stock or provisions accruals or retained earnings? And investments? Yes, investments are part of assets, and you will learn about them also later in this video. Only these 3 items are actually assets out of these 9 items shown above. The other 6 items are either part of liabilities or they're part of owner equity. And you will learn about both liabilities and owner equity in a later puzzle that you will play. So the idea here is now for us to focus only on assets and the asset block that we see to the left. Assets broadly can be categorized as fixed. A fixed asset is basically something which's useful life is more than one financial year. Current assets, the useful life here is within a financial year. And investments, whose period can be more than a financial year or less than a financial year. We will be looking at some concepts related to assets, fixed assets, particularly like depreciation, renovation, etc. Let's take a look at property and equipment, the first of the assets on top. Property and equipment are also commonly known as fixed assets. They are of three categories mainly: land, considered an immobile property; building and plant and machinery, also considered immobile property; and furniture, fixture, and equipment, which are movable property. And we'll also be looking at some concepts which are related to land and building, plant and machinery, and furniture, fixtures, and equipment, like amortization, depreciation, renovation, etc. So let's take a look at property and equipment and dive one level deeper into the first of the fixed assets, land. Land, as we said earlier, is immobile property like building or plant and machinery. Land is also something that is amortized over a period of time, unlike depreciation on building and plant and machinery, which are charged over the useful life of the fixed asset. And of course, the useful life is something we will be looking at separately for the fixed assets. Land particularly has a real estate value, and in the case of hotels, literally is determined by the location where the hotel is situated. And we'll look at some related concepts as well. The next of the property and equipment fixed assets is building. Building, as we saw earlier, but not known very commonly, is actually one of the major revenue sources for hotels, because the building is what houses the guest rooms, which are sold and become room revenue for hotels. Building is depreciated over the useful life, unlike land, which we saw was amortized. And the useful life of a building is generally considered about 40 years or above. We will look at some related concepts like depreciation, useful life, and revenue in a later puzzle. Next on the list is plant and machinery. Plant and machinery is another of the immobile properties. For example, you can have a chiller plant, a boiler, a laundry, flatwork ironer. These are typical plant and machinery which are immobile and commonly found in hotels. Plant and machinery is also depreciated over its useful life, like building, and the useful life of plant and machinery is generally considered to be 5 years or above. We will talk about related concepts like depreciation, useful life in a later puzzle. The third fixed asset part of property and equipment is furniture, fixtures, and equipment, popularly known in the hotel industry as FF&E. Furniture, fixtures, and equipment, unlike plant and machinery and building, are movable assets. For example, guest room furniture, kitchen equipment, office equipment. Furniture, fixture, and equipment are also depreciated over the useful life, just like plant and machinery and building. And the useful life of furniture, fixture, and equipment is generally considered to be 5 years or above. We will understand some related concepts in a later puzzle. The next category on the assets in the block above are current assets. Current assets are different from fixed assets. Let's see how. The current assets, which we saw earlier as having a useful life within a financial year, And the first of them is cash. And this includes both cash available as well as in bank. The second item under current assets is accounts receivable, which is actually sales made but cash not collected yet. And the third one is inventories, which are goods which will be sold or consumed in the hotel operation. Let's now dive one level deeper into current assets. Cash is the first of the current assets, and cash is also the most liquid. Liquidity is a concept we will see in relation to current assets in a later puzzle. Cash includes both cash on hand in the hotel as well as in the bank. And cash is something indispensable for continuously running the daily hotel operation. Liquidity and short term solvency are related concepts we will look at in a later puzzle. The second of the current assets is accounts receivable. Accounts receivable is considered the most liquid after cash. And accounts receivable, as we saw earlier, is basically revenue earned but cash not collected yet. An important thing that managers often ignore is that accounts receivable can bring in a risk of losses to the hotel if not monitored. And we will see that in the related concepts of liquidity and average collection period. The third of the current assets, inventories. Inventories are considered the least liquid among current assets of cash, accounts receivable, and inventories. What are inventories? They're basically sales not yet made or goods not yet consumed and goods currently stored in the hotel premises. Inventories, just like accounts receivable, also run the risk of incurring losses to the hotel if not monitored. We will look at the related concepts of liquidity as well as inventory turnover ratio. Finally, investments are the third of the major categories of assets you see on the block above. Investments basically relate to any money placed in real estate, equity, or any other form of investment so that a return is earned. And we will see some related concepts as well. In summary, let's take a step back and understand what we just saw. These are all the assets that a hotel has: fixed assets, current assets, and investments. And let's take a step back further and look at where assets feature in the balance sheet. And yes, we come back to those blocks that we talked about earlier and also saw. Do you now understand better what assets are? We will look next at what liabilities are. Along the way, did you notice something? Something very different about this balance sheet? There are no numbers. Assets, liabilities, and owner equity are in blocks, just like Lego blocks. So, what's going on? Well, as a finance professional for more than a quarter of a century, something of a lesson that I have learned is this: managers are really intimidated by numbers, as in they fear numbers. So, I teach financial statement concepts without numbers so that you can grasp the concepts quickly And I use visual blocks for that, just like the Lego blocks you can see to the left. After managers like you become comfortable with concepts, I introduce financial statements with numbers. Take a look at the following slide. This is a traditional balance sheet with numbers for 2 years. Let me tell you that this whole approach of learning concepts first without getting cluttered by numbers will get you to learn it 50 times faster, and you will retain it longer because it's a visual medium. I will see you in the liabilities puzzle, which is the next in the series. Learn why liabilities bring risk to the business, learn about different types of liabilities, and liabilities related concepts, of course. If you like this video, subscribe to Profits Masterclass channel and get all your future videos straight to your inbox. I will see you in the liabilities puzzle.